The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm Alex Pang. Alex Shanks is away on vacation, but I'm pleased to have a special guest with me today. His name's Tuan Luong. He's a commercial mortgage broker with Bricks Mortgage and founder of Bluestone Capital. He's also passionate with training and educating agents about the world of commercial lending. Tuan, welcome to the show.
Thanks, Alex. Happy to be here and excited to talk more about commercial financing.
Absolutely. Tuan, why don't you just tell us about how you became a commercial mortgage broker? Because most of the time when we go to school, that's not high on the list of people of things that we want to do. And how did you end up landing in commercial financing?
Yeah, originally I studied finance in university, and then right after graduation, I got a position as a commercial real estate appraiser. And so I did that for almost 2 years, and then I realized I enjoy working with clients and the end users. And so then I made the jump to commercial banking right after, where I spent about 8 years there working at various banks. And then I became a commercial broker about 8 years ago.
Oh, wow. That's fantastic. So never in that period did you venture into the residential space. It's been commercial all the way.
There was some dabbles into residential. So when I was in private banking, we did a combination of both. So I did do the residential there too. So I did all sorts of lending. I learned the various types of commercial financing as well.
Since you had a dabble in residential, I guess you like the commercial side better, or how would you compare the two?
Yeah, it's a great question. I think they're very different in terms of how you underwrite. And also, so I like both, but I think definitely my strength is on the commercial side. I feel there's a lot more, you're able to be a little more flexible with your underwriting, or at least and it's a little bit different than residential lending, which we'll dive into as we go through some of the questions later.
Yeah, let's get the elephant out of the room out of the way. What's happening in the States and tariffs? Are we going to have tariffs? Are we not? It really changes day by day. How's that affecting commercial real estate and commercial financing in your world?
Yeah, I think it's impacting everyone indirectly or directly, whether you're in real estate or you're a business owner or you're an end user, like a client looking to purchase goods even, right? So I think it's impacting everyone in some way, shape, or form, or it's going to, depending when this kicks in or not. But on the commercial real estate side, I can see, depending on which side of the spectrum you are, say if you're a developer or in construction, you're looking to purchase materials and you normally import from the US, that can have a dramatic impact on the cost of construction now. Now that cost is gonna get passed on to the end user who's looking to build a home. So now your construction budget is gonna go up, and that's gonna have a ripple effect where the lender's gonna ask the question, is this build feasible anymore? Or is it too expensive? Or is there profit margin to be made? So I think in that kind of scenario there, like in the development space, you're gonna see an impact unless maybe the Canadian company looks to import the goods or steel or wood from another country where there may be no tariffs. So I think this kind of situation is, how do you adapt in this environment to ensure that it doesn't impact you?
Yeah, what I'm seeing, correct me if I'm wrong, especially in the development space for rentals and condos and high rise and such, the big players, especially in our part of the world, in BC, the big players like the Anis, the Bozas, Aquilinis, Lettingham McAllister. Who am I missing? The oligopolies. They're going to be fine because they're just flushed with capital. Worst case, in a downturn in the market, they can just sit on the land and then just wait till conditions change. Probably the ones that are going to struggle are the smaller developers, the small to medium size. Am I correct in that?
Yeah, for sure. I think because they're not able to hold onto the project long enough. And we're seeing that right now, even before tariffs, with the high interest rate, how much impact it has on even some big developers too, where you could have been overstretched. But you're right. I think like the medium to small size developers, you have less wiggle room to make that decision to stop building or not. And so it does have a big impact on depending where you are in terms of your financial.
You're finding that developers, are they wanting to shift their supply line from buying from the States to going elsewhere? Is it that easy for the big business to pivot that quickly? Or are they just sitting and holding and waiting and see how this whole this tariff thing plays out?
I think it depends. Of course, it's going to have an impact depending when the construction is. So a lot of developments are going through different phases of development where they're waiting for permits. So construction might not start right now. So they can plan ahead, right? They can purchase the materials. They can work with a GC, because a lot of them are working with a general contractor who is buying supplies. So they can forecast and plan ahead, but there's some that are in the middle of construction. A lot of the bigger projects, they already have a fixed price contract in place so that they lock in the price at a certain time. So I think we're just in a dynamic environment moment where no one has made any major decisions yet, I think, but it's something that's in the back of their mind, and how they're going to pivot and adjust to it, I think is going to be the key thing. But I don't see anyone making like immediate changes right now. Not that I know of. I'm sure there is probably some sort of talks about it or behind the scenes with the development and their team on what to do if it's the case.
I guess
think.
I guess it's the same too when it comes to the residential space. Whenever there's uncertainty, people do nothing. They just sit and wait. And I guess that's the case too, even with the developers and the large projects are happening. It's just no one knows what's happening because honestly, things change day by day, right?
Yeah, and things still have to go. I know developers that are launching pre-sales right now. They're still going ahead. And because there's other factors where they want to take advantage of the spring market, the lower rates possibly. And so they have, it's a balancing act, right? If you pause construction, a lot of developers have done that already when the rates were high. So a lot of projects got stalled. So in a way that they got to balance that timeline too. So I think it really depends on the type of project you're building. And then you got to look at how, and some of them have more wiggle room to absorb the higher costs because maybe they bought the land at a good price or a few years ago or even years ago, right? So everyone's financial DNA is very different. And I think it's
well, especially on the residential side, we're starting to hear stories more so in Toronto than here. But the pre-sales are, it's going through a cleansing right now where developers are trying to, because they're trying to like close on units where, I don't know, maybe this is a number off the top of my head, maybe 25 or 30% of buyers can't complete because of the appraisal not meeting. And you hear the word blanket appraisals coming in. Are you hearing that over on your side of the docket?
On the commercial side, I don't see it as much because I think it depends on which segment of the asset class. Are you looking at office? I know a few people that have office space where they can't sell it right now. So they have to now repackage it as an inventory loan so they can sell it over time or be creative about it. And that's another thing we can go through later as well. But yeah, on the commercial side, I think the condo market does impact commercial financing because that's where the commercial loans are taken out of. So it does impact that for sure, where the end users might not be able to close right now. So developers are being creative, working with banks to see is there a way to finance this or help bridge that gap of the value there.
Currently right now, where are you seeing most of how's the commercial market doing? I guess commercial is like such a big umbrella and there's so many different segments. Why don't you just touch on like the different segments that and which ones are doing well, which ones aren't doing well?
So the first one you touch on is the whole condo market. That obviously is not doing very well the past couple of years, just because of the market conditions, the high interest rate, and who can qualify. And then also in Toronto, I believe there's this bit of an oversupply of those of units now, and we're seeing a lot of even the rent has gone down in Toronto too. So that's a segment of its own. Another space that got hit pretty hard is office. Right after COVID, I think a lot of people work from home, and even though a lot of companies are trying to mandate that to come back and work in the office, there's still that kind of demand for office space isn't there. So I've seen a lot where that industry, say office, have to now pivot or adjust where these vacant office units, what are you going to do with it? So people are being creative to maybe convert the space into a WeWork or a co-working space or converting to hotel even. I've seen in Calgary where people converting to hotels or condos just to meet demand in certain markets. So that's the office space. Retail was hit pretty hard too. So I'm sure you've seen just going down, say, Robson Street, for instance, you'll see a lot of big box stores where they're looking for tenants. So retail's been hit hard because of e-commerce and obviously just the global economy too. Again, they're being creative with the space as well. I've seen some people, I think when I was in Santa Monica, people were using the retail space for pickleball because of the explosion of pickleball. And I know you're...
Oh, yes, I've joined that. I've joined the cult.
Yeah. I've tried it a couple times. Very fun. It's very fun. And so just looking at how people are using these empty space for demands such as pickleball, you got to be creative, I think. And then as you move down the asset classes, the popular one I would say is right now is anything that has income. And what I mean by that is whether you're buying a shopping mall with a lot of anchor tenants, there's stability there. So that sector has been doing pretty well. Hotels has been doing really well too. So a lot of people are investing in hotels. There's a lot of baby boomers who are selling motels unbranded. And so now the buyers are buying it to rebrand it into a Hilton or something different brand. And then that way it can increase your value, add value that way. Another very popular investment is the multi-unit apartment buildings. So anything 5 units or more. And there's a lot of favorable lending programs for that. Actually, to circle back on a lot of the condos now, a lot of developers, instead of building these condos to sell, they're building it to rent out. So they call it rental buildings. So they're building 5 stories, 6 stories just to rent it out because of the favorable financing they can get, the current market conditions.
Sorry.
Yeah. Right now, it's just, I think the key thing is every industry is facing some sort of challenge. and it's how they pivot and is the key
What,
thing, I think, for
like you
each
were
industry
talking about
or
favorable,
each.
are we talking about the CMHC kind of 50-year amortization? Do you want to touch on that? Is that the only thing that's really going ahead because it's the numbers
Yeah.
make sense?
Yeah, the numbers make sense. So there's a lot of myth about that because I think the advertisement talks about select and the 95% financing and the ultra low rates. That's assuming you qualify. Just like on residential side, the net income has to debt service. And it's the same thing on the commercial side. So if you buy like an apartment building in Vancouver, you're not going to get 95% financing. But if you buy in Calgary or maybe Nova Scotia, you might be able to get 80 to 90%. So it really depends on the financials, but the favorable financing is you get better rates, longer amortization, and also the way you qualify is a little different than your traditional commercial bank. So a lot of people have been looking
Yeah.
to that as investments
I like you
financing.
touched on it a
Yeah.
little bit about hotels being demand, like motels and hotels. I guess that kind of plays into the whole clampdown of Airbnb, especially in BC. Now that, man, geez, even like Kelowna, they don't have Airbnb and hotel rates are so sky high. And I guess that shifted towards there's just not
Yeah.
enough hotels. And the ones that are, they're just charging an arm and a leg for nightly rates.
Yeah, bingo. Yeah, you hit that helped a lot too. And even just a year before that ban, because everyone's traveling more now, because we went through a phase of COVID and then restricted travel. And then so now it's just the travel, everyone's traveling a lot more. So definitely hotel, the occupancy rate has gone up. And so there's been a big shift. A lot of institutional and even investors are now looking at buying hotels that weren't doing well or needs maintenance or renovations. They want to buy it and then turn it around and add value. So that's another big shift. And because of the Airbnb ban, that also has a huge impact just for even local travel and
So
stuff
why
like
don't you
that.
just educate? Like, there's a lot of listeners here, including myself, that doesn't understand commercial. Is it like residential where you qualify on individual's income, or is it something different in the commercial space?
Yeah, so it's definitely very different, I would say. And that's where I like that area better. And I think it's a big opportunity for even if you're in the residential space, whether you're an investor in the residential space or a broker or a realtor in the residential space, to look into the commercial side. Because it just opens up the door for a lot more things. So the difference would be on the residential side, you're looking at the income, the credit, and you're really looking at all the debt that the client has, and you're going to make sure that the income they earn can service all that debt they have. Now, on the commercial side, I can actually isolate it, meaning I'll still look at credit and income just to make sure the client is not over leveraged. But I'll look at the asset you're buying. Say, for instance, Alex, you want to buy a 6 unit apartment building. I will underwrite just based on that building itself. Will the income from that 6 units support the debt that we're going to lend to you? And that's the key factor there. So you almost, in a way, I find a lot of clients who cannot qualify on the residential side end up being able to qualify or buying commercial property still. And a lot of my clients who are like self-employed, they don't declare much income. That's another challenge too, I think, on the residential side, where if you're self-employed, it's a bit, there's options, but there's limited, I think, to certain types of lenders, like B lenders, I think, right? On our end, we had different ways to qualify them. And yeah, so we don't look at just the income itself and the debt, personal debt.
Speaking of that, are you seeing a lot of people in the last couple of years, because rentals have gone through a rough period the last couple of years in Vancouver and Toronto? Rates were sky high relative to us, 5-6% numbers. The math ain't mathing for investor condos. Are you seeing more? And then there was a period where the Vancouver or the BC and Toronto money moved over to Calgary, and we're seeing signs that kind of have peaked. In that same vein, have people slowly start shifting towards on the commercial renting side, the multi? Yeah.
Like investments, right? So if I were like in Vancouver, I think we saw a lot of customers buying pre-sales years ago, and basically everything was a win-win. You're cash flowing because the rates were low, so your monthly payments was positive cash flow, and then your condo is also appreciating at the same time too. So you got this doubling effect, and it's almost like you couldn't go wrong with a pre-sale purchase a few years ago. But now you're looking at, even in this market, things aren't out right now. You're getting negative cash flow. So yeah, a lot of clients have shifted their investments into commercial. And when I say commercial, this could be different asset class. So I think the first easy one people are doing is a lot of people are buying a detached home and they're converting it to a duplex or multiplex. That's one way of that plot of land. So you used to have one home, two rental units. Now you build 4 units, and you can sell 3 units and keep one. So there's a lot more flexibility. The other way is people are just buying ready to build apartment buildings that already have tenants in them too. So that's why I think Calgary and Alberta was a very attractive investment opportunity because of the price point and the cap rates that you got on that. And then the other thing people like is people are investing into industrial, say an industrial property or warehouse where they own the property and they lease it out to a local business. And the great thing about that is that the tenant law in commercial is a lot different than the residential side. And also the tenants on the commercial side, they pay for all the expenses. It's called a triple net lease. So these tenants are paying for the insurance, the property tax, the maintenance, and the landlord does not pay for that. On the residential side, you're covering all that costs. So I think there's a big shift in terms of how people invest now, I would say, or where they're diverting
Are you finding
their investment.
So in the commercial space, there's no rental restrictions, are there? Like it is in the residential?
Yeah, very limited. Sometimes if you're in a strata, the only restriction would be maybe a certain type of business cannot operate within the strata because it doesn't fit the ecosystem. So that's the only minor restriction. But otherwise, you as a landlord, you can have any term because you're negotiating with that tenant in this case. And a lot of times, triple net, you're allowed to have rental increase. You could also not renew the lease as well, like depending how you it's all how you set up that contract. And every contract is different.
Yeah.
So it's like very case by case. So it's a lot more easier if you want to say get a new tenant. And so that way you lease at the current market rent.
And oftentimes, typically, what kind of term lengths do you see? Because in the residential, it's usually year by year. Like on the commercial space, do you see maybe 5 or 10 year leases, those kind of cases? Or what do you see?
Definitely long-term, like anchor tenants, say Superstore or Best Buy, they're going to try to lock in for 10, 15 years. But within that lease, they're going to have a language where every year they can have an increase. So I've seen lease where it's called step-up lease. And basically the rent can increase 2% a year for the next 10 years. Or you can keep it stagnant, just the same flat rate. So that's a nice thing too, is that it gives the landlord and the tenant ability to negotiate something that they both towards that.
Yeah,
that
I can imagine though, if it's a set rate for 10 years, then it'll probably have to be marked a little bit higher than current to offset 100%. The inflation that's going to come in your reduced buying power of your dollar.
Yeah, usually there's always a step up. Every lease is usually a step up with an option to renew. Some don't have an option to renew. And then you think about it, these businesses will want to stay here long term. Once they say a dentist leasing out a space in that area, that neighborhood, they want to be there for the long term. That's where their clientele's coming from. So it's quite a sticky asset and it's usually worked out pretty good.
I'm seeing sometimes tenants end up liking the location and they just want to buy the space off the owner.
Yep, a lot of times I've seen that where it's basically the owner gives them, they want to sell it or they've been pitched by the tenant to buy it. So that's a very common situation too, where the landlord end up selling to the tenant. And then, that's a good option to have too for as a tenant too.
So you touched on it a little bit over the last couple of years, but as well, residential has gone through a tough period with interest rates being higher. It's come down from the peak. Did you experience that as well in the commercial space the last 2 or 3 years?
Yeah, I think everyone did. It was pretty bad too. So on the commercial space, because the rates were so high, it wasn't penciling out too. So what's happening is that for a purchase, for instance, the client has to put more down payment down. Or we had to come up with different ways to do. I had a client where they're looking to buy and flip the property. So we had to put them on a short-term interest-only type loan. That way to keep the payments lower instead of paying principal and interest and gives them flexibility to sell. But yeah, we face the same thing as well on our end where because of the higher rates, the loan to value became a lot lower. The clients had to put more equity in. And then also at the same time, I saw the rent rates have gone down too in some of the different asset class, like office, retail, and industrial. So that also impacted the rental income that the owner was collecting as well.
Yeah, I'm also seeing too, like when you have some sort of, commercial might be affected because the business owners, their businesses are affected because consumer spending is down and because their cash flow is down, it's harder for them to get into, and they're obviously not going to make moves if the revenue has gone down, right? They're not in as good of a financial position.
That's the other problem too, is that during that time when the economy, with the higher rates, and actually during COVID, a lot of tenants did not pay the rent. So the landlord had to absorb that or at least withhold that. So a lot of tenants did not pay. So now a lot of lenders now are asking, so on an investment deal for myself, like when I'm underwriting a deal, I have to look into the quality of the tenant now. So say for you want to go out and buy a commercial property. If I'm trying to help you underwrite the deal, I have to make sure that you are taking on a strong tenant, someone that's been around for a long time, strong financials, because the last thing that we want is that you buy this property, you rent it out to someone, next year they don't pay you. And now the loan's at risk and you're at risk too, right? So now I find that with the way we do financing, it's just a lot more layers and more questions that the underwriters ask. And that's something that's good for yourself as an investor. You need to look at both angles. It's not just the rental income, but also the longevity of it. Will your tenants be able to withstand ups and downs in the economy, potential tariffs as well, right?
Now, you touched on this earlier too, but are you seeing, with the difficulties on the residential space, are you seeing more new people shifting from residential to commercial? Or are you seeing more of the new first time commercial investor? Or are you seeing just more of the people in the commercial space just doubling down and more investment there? What are you seeing in your end?
Definitely the latter. I think those with capital just on the sideline, they see the opportunity. They already purchased their first or second property. They see the opportunity. And they're able to stomach the risk a little bit more. Your first time commercial purchasers, they're definitely going to be a little more cautious because they're going from one asset class that was not doing well to a new one. It doesn't mean the grass is always greener on the other side because they have to look at, their eyes have to adjust on how they look at the risk. It's a lot different now. So now it's just a little bit more for them to pull that trigger to go, okay, I'm going to go ahead and buy it. It also takes a lot of more due diligence, but definitely I've seen a lot of people shifting over. So I'd say the biggest shift I've seen is people going from residential to now buying 5-unit apartment because it's almost the same asset. It's residential, but you're buying 5 units now. And people are looking further away from the city center. Someone from Vancouver is not going to invest in Vancouver. They're looking at outside of Vancouver or another province.
And obviously there is going to be a jump up in terms of price point. Are you finding that the commercial investors now, you have to inform them like you need to bring in a partner, or there's more like almost like a conglomerate now investing versus an individual?
Yeah, a couple things like creative financing is a big thing. So there is a vendor take back loans. So like you're buying commercial property, you're going to negotiate with the seller to see if they can lend you some money in terms of a vendor take back loan, so that in that purchase you'll get the mortgage, you'll have your own equity, but you also have a bit of a seller financing as well, just to make it work. And a lot of joint venture is a big thing. So in the land and development space and also in the investment space, there's a lot of these, I'll say, investment groups where people pool together capital to now acquire commercial property. And keep in mind, commercial property, some of them can be the price point can be very low too. It's like, it could be anywhere a few $100,000 to in the millions, right? So it depends where you're buying. So also the point varies depending on what you're buying. Yeah, you kind of
touched on it a little bit. Can you explain to the viewers and listeners vendor take back? You glossed over it really quick. Not many people know about it. I know about it, but maybe you can explain it to the viewers out there, listeners.
Yeah, that's usually called VTB or vendor take back. And this is when, as a seller, I might be in a market where I need to attract buyers. And unfortunately, financing might not line up. For instance, if I have a buyer, they're interested, but they're only able to get 50% financing at the bank. This transaction might not go through because the buyer does not have enough down payment now. So what the seller is going to do to make sure that the sale does go through for them, they'll offer a portion of that. So say the bank lends 50%. The vendor or the seller will provide the next 25% financing. And then the client now comes with just 25% down to make this transaction work. And then this vendor take back loan might be over 4 or 5 years. And then that gives the buyer time to pay back both the bank and the vendor as well, or the seller in this case. Yeah, they call it seller finance.
From a title perspective, are they considered a second mortgage, so to speak? Okay. I know like in the residential space, the A lenders, like the big banks, they don't allow vendor takebacks, and it's more in the alternative lending space. I guess in the commercial space, it's quite common, or it's banks and lenders are okay with that?
Yes. Yeah. So tier 1 big banks, small banks, they all allow it. Of course, it depends on the term and how leveraged you are. Like at the end of the day, if the purchaser puts 5% down, there's no skin in the game, they might not approve that loan. So there has to be an exit strategy that where the bank knows that in 4 or 5 years with where the rental income would be, that this loan could be refinanced to pay out.
Fantastic. Tuan, why don't you tell us some things that you do that most people aren't aware of? What kind of interesting loans that you've done that some people didn't know that you could do?
Yeah, there's a lot. I'll break it down into, let's start with operating businesses. So this is non-real estate related. So we can help clients who, whether they own a restaurant, a hair salon, a daycare. So I'm helping the client right now where they're buying up the business, just the business, the daycare, and the daycare currently is renting out of a church. So the landlord's a church. So once you buy this daycare, you end up paying rent to the landlord still, but you bought that book of business. And so we provide financing on that daycare acquisition. And that could help with buying the business and any of the equipment that needs to be upgraded. So that's another neat area where I feel a lot of people might not know that we do. A lot of mergers and acquisition. I think one of your clients, Alex, we worked a couple of years ago, where he's a dentist and he was looking to buy a second practice. And in that industry, like I think this is like right now we have a lot of baby boomers who own businesses and they're looking to sell their business through some sort of merger and acquisition where someone in that industry wants to take over that existing business. So that's been a very popular type of financing that I'm doing right now. And then as we move through, there's a lot of unique assets in commercial. So student housing is a big one where there's great cash flow. And so a lot of my clients are investing into that. Hotels is another interesting asset class. What else?
I was going to touch on that with the aging
that I looked at
population.
recently.
I'm seeing, hey, the care homes could be a big thing to get into.
Yeah, I think anything in that industry is really big, and it's a big population of baby boomers that flow through. And then the other side is that, speaking of that same segment, a lot of clients don't want to go to care homes. They want to like still stay where they live. So what they've done is they now convert their detached home into a multiplex where they'll build 4 units, and one of the units would be their kids would live in it. They would live in a smaller unit, and they might sell 2 of the units or rent it out. So people are being creative, I think, with what their living arrangement now, I think. Because some people don't really want to move away from where they live right now. That's a big area. And then apartment buildings, obviously, is a very popular asset class because of the stable income. And then land construction. We do a lot of that. People looking to renovate, add a laneway home, looking to convert their home into a duplex or fourplex. So that's quite popular. I'm sure I'm missing other stuff too, but yeah, we see quite a wide range. I think anyone that needs financing, we can find a way to find that capital.
You touched on it. I didn't even know myself before I started working with you. What you do may not necessarily have to be tied to commercial real estate. Like when you talked about operating business or even equipment leasing, I'm like, oh, wow, okay, that's good to know. Yeah. And you've helped some of my clients in that vein as well. When you're talking about rezoning and all that stuff, with the province wanting to rezone every single family lot to multiplex, and we're seeing that cities, some are on board and some are not, particularly West Vancouver. It's the NIMBYism. Are you finding, even though the province wants it, there are lots of pushback on your end, and there's still lots of red tape when it comes to development in that vein?
Yeah, there's lots. At the federal level, they're saying, hey, across Canada, you can now build multiplex. But then once you break it down to each city, it's very different. Vancouver has a very robust system where there's a process in place. And even then there's still, rules and stuff that there's still hoops and hurdles, but it still at least has a system in place. But then once you start getting to other cities, it might not be the same. Like I think Burnaby had a lot of resistance for the longest time. They're like, hey, we don't want this. So there is a lot of red tape. And that's another problem too, is that sure, they're coming up with all these great lending policies with CMHC to allow you to build more units to help support the rental supply and immigration coming in. But at the end of the day, all the red tape slow this down too. So we're not getting enough units out. And so it's a bit of like, we're still going through this process. Like we haven't seen like where everyone has adopted this new policy yet though. So that makes the uncertainty also makes investor more cautious when they're investing and thinking about going into this segment of.
Yeah, because I'm sure a large part of this too is you need buy-in from the city, whatever you want, whether you're developing or if you're buying a business, changing over to something else. It needs to be approved by the city. You need to get permits and business licensing, all that long list of things. And as much as the province wants it, it's almost like you need a team. Like everyone needs to be on board. And if there's more fighting, then nothing happens.
Yeah. And then when there's traction, all of a sudden you change leaders or people change too. So that slows things down too as well, I find, right? But yeah, it's not, if everyone's on the same team, on the same page, and I think everything would move a lot more smoothly. But unfortunately, that's not the case right now, as we see.
Well, Tuan, for folks out there, where can they find you?
Yeah, I'm on LinkedIn, Instagram. We have a YouTube channel where we have some content and we're going to put more on. But yeah, you can Google me and look me up, or maybe you can provide some information below. They can reach out to me in the channels.
So Tuan's website is Tuan, TuanLuong.ca. So this has been long. Tuan, thanks for joining us. I really appreciate it. All right, folks, that's it for this week. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.